Hi, welcome to Complete Wealth Budget Wrap for 2021. Well, this year's budget is in many ways just a follow on from last year's coronavirus budget. And the simple theme of this one is, again, the government basically trying to ensure that there's enough money to keep the system going, to try and drive unemployment back down and trying to get the economy back to some semblance of sustainable growth after the disruption of 2020 and the impact the coronavirus had and is continuing to have. So in short, this is much more of a classic sort of pre-election style budget, with the government announcing quite a lot of expenditure and almost a desire to keep the pumps open and primed as long as possible to make sure that the economy recovers and we grow our way out of this problem. So the downside of this budget is deficits whilst aren't predicted to be as bad as they were originally predicted, they're still going to be very, very significant. And so there still is that issue of how is also this going to be paid for in the end. But that's really not a problem for today. And to the degree that it is a problem for Australia, it's also something that the rest of the world is grappling with. And so it's not something that we're in a unique position in. So overall, whilst big spending budgets as a general rule aren't necessarily a great idea, the government really has headed down the right path, we think, in terms of making sure that the economy has a reasonable footing from which to rebound. So let's move into some of the detail. I guess the good news from a tax perspective is the previously legislated tax changes, and there's the drop in marginal tax rates starting this year and going for the next few years, with another drop in 2024-25, they're staying. So ultimately, for most people, once 2024-25 year kicks around, most people's marginal tax rate will be 30%. So that's not a new measure, but it's not being changed in this budget. So that's certainly good for most people. In the short term, the low and medium income tax offset, that's been extended for another year. So basically about $1,080 up to $1,080 per person, double that for a couple, in essentially tax rebate. So that's being extended for another year. So there's a little bit of extra money available for low to middle income earners. The main thing that will affect most of you out there is actually around superannuation. So there's nothing major in terms of superannuation, but a number of small tweaks which will change some of the things, some of the strategies we look to implement and maintain over the next sort of 3 to 5 years. The big, somewhat surprising one, I guess, to some degree, is that the work test has been removed. So you may remember that the work test used to apply up to age 60, it was pushed out to 67 and beyond, to sort of 74. It's now been removed completely. And so what that means is people who are essentially semi or fully retired can now still continue to make contributions to super. Previously, if we weren't working with meeting the work test, which is essentially 40 hours work in no more than 30 days, you couldn't contribute once you'd reached age 74. So that's changed. Now there's not going to be an age limit on that, which means people will be able to continue to make contributions to super, both concessional contributions and non-concessional contributions. So a good measure for people who haven't accumulated enough super, but also quite an effective tax planning opportunity as well. The superannuation guarantee legislation, increasing that through in future years, that hasn't changed. So SG contributions will continue to rise. The downsizer contribution, this is the contribution for up to $300,000 that you can make to super, which doesn't go against your other superannuation caps. They've actually dropped the age of that from 60, or going to drop the age of that from 65 down to age 60. So that's from 1 July, so 2022, so just over a year away. So anyone looking to make a downsizer contribution, certainly you want to sort of get that organised in the next 12 months. If you're in that age bracket, that's going to be cut out by the age moving from 65 down to 60. The other interesting measure or interesting theme in this budget was around housing. And so one of the housing measures, which crosses over to super a little bit, is in the first home super saver scheme. These things always have lots of words in them. That's been increased from 30,000 to 50,000. So essentially allowing first homeowners to accumulate money in super in a tax effective environment that they can then withdraw for a deposit on first home. That's been increased from 30 to 50,000, and that's again expected to start from July 1, 2022, so just over 12 months away. There's a few other minor tweaks in terms of super, but nothing major in terms of being wide-ranging or applying to many people. As I said, mainly just sort of little tweaks in super as opposed to anything sort of too fundamental. Government's also played around a little bit with some of the social security issues, mainly around the pension loan scheme. Again, the detail in that's relatively minor. But one very interesting measure that they've announced is that this new family home guarantee. We're allowing single parents with dependents to purchase a home with as little as a sort of 2% deposit. The government's going to guarantee that lender's mortgage insurance section that normally can restrict relatively low income people from saving enough deposit and being able to borrow enough to buy a house. That's a very interesting change in direction from the government, and whilst it might make sense in terms of allowing people who are struggling to be able to purchase a home to buy a home, clearly any measure that allows more people to spend more money on housing can do nothing else other than to increase the long-term cost of housing. So it'll be interesting to see how well that one gets legislated and it kind of plays out. But in the essence of helping people into housing that would otherwise struggle from the social perspective, obviously there's a good incentive behind that, but whether that will really work, I guess, will be interesting to see in the longer term. Aged care was a big winner in this budget. A lot of money being spent increasing the not just issues coming out of the Royal Commission, but ensuring that many more places are available and a lot more funding, particularly for home care packages. So obviously the government's going to continue to try and keep people in their homes as long as possible and support them in those environments, which generally speaking for a lot of people will be a very positive thing. Small business, again, a little bit of a winner, similar to the last couple of years with instant asset write-offs and accelerated depreciation essentially. So encouraging businesses to buy equipment that they can essentially write off in 1 year, so that bringing those tax deductions forwards makes it a lot more, provides a lot more incentive for businesses to be spending and helping to sort of grow the economy back to where we were sort of pre-coronas. They've also allowing small to medium-sized businesses with a aggregate annual turnover of less than 5 billion, so up to quite large, to carry back prior year losses as well. So if you're in a situation where you have a business that has some prior year losses, you certainly want to be talking to your accountant around making sure you can utilise the carryback of those previous losses. So look, they're the main sort of issues that popped out of the budget this year. Really, very much, as I said, like a bit of a pre-election budget, a lot of money being spent on a lot of initiatives, some very interesting and well-received measures around domestic violence and mental health and some of those things that certainly are reasonable issues in society, which obviously have a very substantial and wide-ranging potential economic impact as well. So the government's certainly out there spending a fair bit of money. Yes, it does create issues potentially around inflation and some of these issues that we need to keep an eye on in future years. But in the short term, generally speaking, we think this is a fairly positive budget because it keeps the economy back to that growth and the new world we all need to get used to following the coronavirus problems for the last sort of 12, 18 months. Look, as always, if you've got any questions, feel free to reach out to us. There's nothing really in this budget that's too urgent, so there's not really any need for anyone to sort of rush out and do anything before 30 June. We've already got the increase in superannuation contribution caps rolling into next year. There's nothing in this budget that's creating a lot of urgency, but there will be some tweaking over the next 12 to 18 months for most people to take advantage of some of these sort of change in thresholds and rates, etc. But we'll pick that up as part of your general review. But as always, if you've got any questions, let us know. Thanks again.